Good morning. This is Manu Walia from Continuum Global Asset Management, bringing you the market commentary on August 26th. Today was a very interesting day in the market for two reasons. One is there was some numbers on the jobs front in the U.S. market, and it was interesting for me because I see the markets gyrating based on some of these fundamental numbers that I will share with you. First of all, we all know that 2009 was a very, very good year for the equity markets in the US. The markets had gone down in March and then they had recovered almost 50% from the lows. That was predicated basically on the thought process that the earnings in the US corporations will continue to move up, and they did. For the last couple, 3 quarters, the earnings in the U.S. corporate enterprise have been very, very robust. We've mentioned that before, but I believe that the focus has shifted over the last few months from just earnings to the U.S. housing market and the jobless front. In other words, people are more worried about the real estate market and the unemployment numbers. Now, a couple of days ago, that is on Tuesday, the existing home sales was very, very dismal. The consensus estimate was close to 4.2, 4.3 million homes, but the actual figures were about 3.8. So there was a huge decline in the existing home sales in the US, which is a bad indicator. Well, obviously the markets went down after that news, but at the end of the day, they recovered. Today, the jobless claims, even though they're pretty high, but there was a decline in the jobless claims. In other words, the market now believes that the unemployment arena may not be as dismal as expected. What this tells me, and I started out by saying it's very interesting, is that the markets move up or down on a daily, hourly, weekly basis, which really is sort of, in other words, a gambling arena. One of my clients pointed out a few years ago that the stock market is legalized gambling. Now, I wouldn't go to that extent, but I would say that to me the analogy is like this. In order to succeed in the market, you've got to treat it like a competition. When you prepare for a competition, you're moving to the point where when the day of the competition comes, you're well versed with all the nuances of the game or whatever game you're playing, and you're prepared to take upon whatever the opponent throws at you. Because we're going through such dismal times, we tend to lose our fortes. For some people that could be patience, for others it could be analysis or a combination. Well, I look at this times as times of a lot of restlessness and a lot of impatience, and that's why the markets are all over the place. I believe that each investor is different, so we have to look inside ourselves and say, hey, am I being swayed by the herd? Am I being a follower? And I can't be. So you look at some of the basic nuances, like, okay, how much time do I want to give to this investment? Do I want to really look at the fundamentals of a company like, let's say, Caterpillar or Yum Brands or McDonald's, and I want to wait for a year? Or do you feel that I want to take a position and trade it by taking a 5 to 7% profit? The point I'm trying to elucidate and emphasize is that we need to be comfortable with what we believe is important in our investing style. Personally, for me, I'm looking at some fundamentals and I'm very relieved that the US economy is going to benefit from, I believe, the burgeoning economies like China and India. And I've mentioned this in the past and I stick to my guns. I can elaborate this for viewers who would like to discuss this in detail. Once again, you can contact us through our website, which is www.cgamadvisor.com. That's www.cgamadvisor.com. And we'll be happy to discuss this in detail. Once again, thanks for listening and happy trading.